Everyone, a very good morning, good afternoon, and good evening to all. Myself, Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will be continuing to work with the indicator trend envelope. This is the second part of this ongoing series involving this indicator, and we will see how we can go on to proceed with the designing and development of the algorithm for profitable trading using this indicator on the Visual JForex board, which has been developed by the Dukascopy Bank SA. In the last session, I had carried out this instrument subscription where the Euro USD is being used as the instrument of choice. Afterwards, the position amount was defined at zero to make sure there is no existing pending or open position already in the account to avoid doubling down of any existing position. And this indicator block along with the information blocks have been added to the setup so far to look at the price volatility and accordingly be able to take the trade. I will give you a brief refresher of sort of what the logic is. The logic is fairly simple. I have to change this chart to the instrument Euro USD, which we are using as the instrument of choice. And this session, we are going to focus on building up the buy side, where we will see how we can look for the buying opportunities whenever we see the trend changing from bearish to bullish. So this is one occasion where we are seeing change in the momentum from bearish to bullish as per this trend envelope indicator, and similar opportunities keep arising from time to time. So if we go back in time, here you can see on multiple occasions we have seen this change happening, and not all the times this momentum sustains. Many a times what happens is we see this spurt and afterwards the reversal happens. There is no big move, and to some extent we can look to avoid that kind of possibility. But of course, no setup is perfect, so it's not like we will be able to avoid this kind of situation all the time. But to some extent we can try, and that's why I have added one more condition. So here, when we see the last hourly candle close above the prior hour's closing value of the higher band, we will look to initiate the buy trade, but not at the market price. What we will do, we will take into account the difference between the opening price and the closing price of the last hourly candle, and whatever is the difference, we will add it to the closing value. So the order will be placed on the higher side. We will be looking to initiate whenever the price goes higher. So we will provide order validity of say 2 hours. It depends on you. You can keep it 1 hour, 2 hour, 3 hours, or even more than that. So it's always up to you. In this representative explanation, I will be keeping the order validity of 2 hours. So we take into account this difference, we add it to the closing value, and then that order will remain valid for 2 hours. And as you can see, the momentum doesn't really sustain, and we see reversal of sort happening here. So this time around, no execution will take place. But if we go back in time, maybe this time around, I think, I'm not sure, but it looks like maybe or may not be the case that the order might have executed. So if the momentum sustains, that's when the order should execute. That's the idea. Even here, no execution would have taken place. Even here, I think there is no sustaining of the momentum. Maybe here the order might execute. So you see, the idea is to avoid the situation where we don't really see the clear cut big move on one side, but rather the instrument remains sideways. So that's the whole logic is. Now let us head back to the Visual JForex board, and we have already taken into consideration the actual difference. Now in today's session we will have to set the conditions for the execution of the trade, and then we will also have to define some additional variables for the purpose of execution of the order, and also for defining the input parameters for the trade command block. So let us now get started. First thing we will do is we add the calculation expression here. we will need to convert this difference into the integer data type. So for that, we are going to need the calculation expression block. And for also placing the order, we need to add it to the closing value. So both these things will need to be done, and we will do it one by one. First, we take into consideration the closing value of the candle 15. So auto created variables, and here you will find this candle 15 candle close value. To that we add the buy side difference. All right, as per Excel convention, we have to get the addition done, a1 plus a2, and this will be the buy entry point. So I will name this variable BEP. All right, so this is done, and the stop loss and the target price will be in proportion of whatever is the actual difference. So whatever is the actual difference will be the stop loss, and twice of it will be the target price for us. So I take this actual difference and we simply convert it into the integer data type. The Euro USD has 4 decimal points. So to get the pip value converted into the decimal point, we will have to multiply it with 10 raised to the power 4. Okay. So for that, I have to create a new variable, pip conversion factor, and there is going to be a1 into a2. And here I will not create the variable just yet. When we get in the trade command block, we will create the variable there to make sure that the data type matches. Okay, for the time being I will join it here. And for order validity, we will need to add one more calculation expression block. Some messages are here. And now and for order validity, we have to take last tick time, and add 3.6 million ticks to it, multiplied by 2. So I will have to create two different variables. This one will have the value of 3.6 millions. I hope I am right with the number of zeros. And additional variable of start value 2. There is going to be a1 plus A2 into A3. Alright, and here also we don't really create the output value variables just yet. We leave it to the moment when we will bring in the trade command block. Now we are going to need logical block. For that we bring in the multiple action, and I will join it on the lower side. If the need be, whenever we will need to add further blocks, we can disconnect the flow and add the blocks, and again we can reconnect it. Okay, now let's start defining the conditions for the execution of the trade. So I will bring in these if blocks here. And as I had explained to you on the chart, the conditions are fairly simple. We want the closing value of the last hourly candle to be higher than the penultimate hour's high band trend envelope value. So for that we have to compare the candle 15 candle close value with the high band 11 value. And this one, first input greater than second input. Okay, and whenever price will start to rise above this candle 15 candle close, we will look to initiate the trade. So for that we will have to consider the 10-second data and the execution point. So here after the closing happens, we will look for some slight correction. So instead of going for a order when price starts to rise, we will place the order whenever the price starts to just slightly decline below this closing value. So I will compare the closing values of these two 10-second blocks, candle 16 and candle 17, with the closing values of candle 15. This has look back period of 1 and 2 respectively. So we will compare the candle 16 candle close. So I add this as the first input. Okay, so this one here, the condition need to be that first input is less than second input. And for this, the condition should be that first input was greater than second input. First input is greater than second input. And after that, we simply bring in the trade command block, the pending open order. So only three conditions needs to be satisfied. The logic is quite simple, both to understand and to the execution as well. Okay. buy stop buy bid, and for execution the price is going to be this BEP. Trade amount I will change to 0.1 million. Default instrument remains as it is. Slippage, I think 2 bips is good enough for Euro USD. Stop loss and take profit. We will have to define this. So I will create a new variable here. And it will be assigned to this calculation where we have simply converted the difference between the last hour's closing and opening value in the integer format. So whatever is the difference, that will be stop loss. And to arrive at the take profit, we will simply double this value. So for that, I need to bring in one more calculation expression block. All right. And to make it double, we will need to multiply it with OV, which also has a start value of 2 here. Okay. So this is going to be A1 into A2 with the name of BTP, and its value will be derived from this calculations result. For order validity, again we have to create a new variable. The calculations have already been done, so we will simply assign this newly created variable to this calculation expression block. Okay, so all these values have now been defined with appropriate variable data types, and our trade commands input values have also been defined. Okay, so with this task done, we can now place this trade command block on the lower side where it belongs, and again we join this to the last block. Okay, so here we have this trade flow going, and with this our buy side of this algorithm is complete. I hope you have been able to understand the logical as well as the execution part of this, and if you have any query you can write to me in the feedback section, and I would like to take the discussion forward. For further coverage on the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can join us for the interactive content, and for carrying out the testing you will need to take the help of JForex platform. So for all these, the links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.